Hey everybody, welcome to the channel. Soil here, and today I want to talk about fundamental analysis and cryptocurrency market. By the help of fundamental analysis, we focus on long-term value appreciation to determine the fair value of a cryptocurrency. The goal is to figure out whether the crypto asset is overvalued or undervalued, and this is achieved by analyzing the right data and running a deep research on the available information about the crypto asset. Now you may ask what kinds of data or information must be analyzed. When it comes to technical analysis, the approach and the methods are the same. You can use the same technical analysis concepts, tools, or indicators in crypto market that has been used in forex, stocks, or other financial markets for many years. For example, in crypto market, you can apply the concepts of trends or support and resistance levels or indicators like MACD or RSI the same way that is used in forex or stock market. But this is not the case in crypto fundamental analysis. Although the approach is the same, and we try to establish the intrinsic value of the asset to find out if it's overvalued or undervalued, but the methods and tried and tested tools in other markets cannot be used for crypto asset. For example, we cannot use business metrics and indicators like earnings per share or price to book ratio that are used in stock market for evaluating a company. A crypto asset cannot be analyzed by the help of traditional fundamental analysis indicators, and we need to look at the asset through different frameworks. For crypto assets, we have three categories of fundamental analysis metrics: financial metrics, on-chain metrics, and project metrics. Before we start these metrics, please give this video a like, and if you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. Alright, let's begin with financial metrics. Here in this category, we deal with data and information related to financial aspect of the asset like trading volume, liquidity, market cap, and other factors related to the economics of the asset. One of the most important factor for investing in any kinds of asset is liquidity, and when it comes to crypto asset, it's extremely important. Liquidity is actually a measure that shows how easily we can buy or sell the crypto asset. As you know, the price in a market is determined by the bids and asks that is posted by the market participants. A liquid market is flooded with bids and asks, and this results to have a tighter spread between them. The problem in illiquid markets is that the spread between bid and ask is larger, and because of this you can't sell your asset at a fair price. There will be no buyers willing to buy at your price, and you will have only two options: to lower your price so you can sell your asset, or just wait for the liquidity to increase and someone willing to buy at your price. For evaluating the liquidity of a crypto asset, we can use trading volume, which can be measured based on our preferred time period, and it shows us how much of that crypto asset is traded in that time period. The trading volume of crypto assets are available in many websites like CoinMarketCap or on most of charts in trading platforms, and it's usually shown in terms of both the number of coins or dollars. Liquidity and trading volume is a very useful indicator in fundamental analysis that shows the market interest in that asset. So by tracking the changes in trading volume, you can evaluate how the interest for that crypto asset is increasing or decreasing among the market participants. The next important financial metric that you must consider is market capitalization, or market cap for short. It's also called network value. Its calculation is very simple. The circulating supply, which is the amount of coins that are already mined and circulating in the markets and are actually in public hands, this number is multiplied by the current price of the asset. This is actually the amount of money you need to buy all the available coins in the market. But please pay attention that this figure is not very exact, because it's impossible to know how many coins are available out there, because the coins can be lost, the coins can be burned, the owner of the coin may be died, which makes the coins dead if nobody has access to its private key. So always remember, the market cap is just approximation on the total value of the circulating coins. And also pay attention that the market cap of a crypto asset can be misleading. Consider, for example, a token with circulating supply of 20 million units. If only one of the tokens, just one coin, were sold, for example $1, the market cap can be calculated as $20 million. This is not a correct valuation, because there must be a value proposition with the token, and if there is no strong value proposition, nobody will show interest in that token. Market cap is a very popular metric and commonly used among crypto investors for evaluating the growth potential of a coin or token. Some investors show interest in small cap coins because they believe that the small cap coins have more potential for greater amount of growth in compared to large cap coins. These are in fact aggressive investors who like to take more risk in exchange of more rewards. And on the other hand, we have investors who show interest in large cap coins because they believe these large cap coins have stronger networks, so more stable in compared to small cap coins. And another important financial metric for evaluating a crypto asset is its supply mechanism, maximum supply, circulating supply, and how the supply of the coin is carried out on the network. Different networks have different rules regarding the supply, and this can have different implications about the performance of the crypto asset in the future. For some investors, supply-related factors are one of the most interesting properties for assessing a coin. For example, stock-to-flow model, which is very popular among Bitcoin investors, are actually based on these supply-related factors. In a separate video, I will completely explain this model and how it's used for predicting Bitcoin price. Alright, let's go to the next category of crypto fundamental analysis metrics, which is on-chain metrics. On-chain metrics are actually data and information that are collected from the blockchain. This doesn't mean that you have to run a node for the blockchain and export the data. This could be difficult and time-consuming. There are many websites that provide these kinds of information, and you can use them for your investment purposes. Alright, the first metric I want to explain is transaction value, which tells us how much value is transacted over a period of time. For example, consider in one day, totally 100 Bitcoins are transacted on the network worth of $40,000 for each coin. By this information at hand, we say that the daily transaction volume was $4 million, or it can also be measured in terms of the blockchain coin or token, just to say that the daily transacted volume was 100 Bitcoins. Another similar metric to transaction value is transaction count. Here, the transaction count shows how many transactions has been done over a period of time. The transaction count is a good measure of activity that is happening on the blockchain, especially when it's plotted on the chart for a set periods of time, so you can identify changes in network activity by analyzing the chart and applying moving averages or other tools to the chart for better understanding of the network activity. But you must pay attention that this metric and also transaction value can be manipulated, and you must look at them with caution because there is no way to find out if the transaction count or the transaction volume is real or fake, because one person can just transfer the coins or tokens between his or her own wallets, and by doing this inflate the on-chain activity. Another on-chain metric that must be treated with caution is active addresses. Active addresses are addresses on the blockchain that are active in a given period of time. Active addresses can be calculated in different ways, but the most common one is counting both the sender and receiver of each transaction for a day, week, month, or whatever period that is desired. Some investors also track the number of unique addresses on a network, actually the total over time cumulatively, and they believe this can better show the interest on the network. But please pay attention that this metric alone doesn't tell us much, because similar to transaction value and transaction count, here also one person can transfer money back and forth with new addresses each time. Another metric that for some crypto assets can be important and many investors pay attention to it is paid fees that can tell us about the increasing demand for the block space. As you probably know, the higher you pay for the fees, the sooner your transaction will be confirmed. Actually, the miners give priority to the transactions with higher fees. It's a kind of like auction, and users all around the world compete with each other to have their transactions done faster. When the network is busy or congested, for example, in times of market crash or pump, the fees are extremely expensive because many users are rushing to do their transactions on blockchain as fast as possible. So studying the transaction fees and tracking their changes over a given period of time can give us a hint on what's going on the blockchain. The most important on-chain metric that many investors pay attention to it is hash rate and the amount staked. Different blockchains may have different consensus algorithm, and having information about this matter can help us a lot in fundamental analysis of the network. Mainly, we have two major consensus algorithms, which are proof of work and proof of stake. When it comes to blockchains that have proof of work consensus algorithm like Bitcoin, hash rate is usually used for evaluating the network health. Generally, the higher the hash rate, the more difficult it is for 51% attack. But when we have increase in the hash rate over time, it can also show that we have growing interest for mining. On the other hand, when we have decrease in the hash rate over time, it shows that the interest for mining is decreasing and more miners are going offline, maybe because it's not profitable for them. I don't want to talk about mining in this video, but some reasons that affect the overall cost of mining are number of transactions processed by them, the transaction fees, the price of the asset, cost of electricity, computing power, taxes, and some other factors. In proof of stake consensus blockchains, the mechanism works differently. People can participate in validation of blocks by staking their coins, and the amount that is staked and its changes over a given period of time can give us useful information about increasing or decreasing interest to that blockchain and coin. In separate videos, I'll talk more about on-chain analysis and different data, information, tools, and websites that you can use for this purpose. Alright, the third category of metrics for fundamental analysis of crypto asset is project metrics. Project metrics are not quantitative like financial metrics or on-chain metrics. These are actually qualitative information about the project, such as the white paper, the team behind the project, and these kinds of information related to the crypto asset. Let's begin with white paper. White paper is a technical document released by the team behind crypto projects that gives us information about the cryptocurrency project. It's actually an overview of the technology that is being used in the project. For example, the structure of the blockchain, the consensus mechanism, the use cases and the goals they want to achieve, the supply mechanism and distribution of the coins, the future roadmap and upgrades, and many other information that you can collect from a white paper. It's highly recommended that before investing in any crypto project, you must read its white paper and evaluate if the goals are realistic or not. It's also recommended to study discussions related to the project to see what other investors say about it and if they mention any negative points regarding the project. Another important project metric is tokenomics and initial distribution. There are many crypto projects that create tokens and they say the token is going to solve a problem. The project itself may seem very useful, but the token may not be such useful in that context. So it's really important to study the tokens or coins comprehensively to find out if it has real use cases or not. And besides this, you must evaluate if the wider market will accept the value of the token or not. And also the initial distribution of the coin or token and how it's supplied is very important. Was the initial distribution through ICO or IEO? Could users earn the coin or token by mining? Did they have pre-mining? If it was distributed through ICO or IEO, it must be mentioned in the white paper how much is kept for the founders and the team and how much will be available to the public. And if they had mining on the network before announcing, we must study the related information to see how much was the creator pre-mining. Paying attention to the distribution of a crypto asset is very important because it can give us some clues on potential risk of a crypto asset. For example, if the majority of the supply was owned by only few people and the supply available to the public is considerably lower, we can say that investing in that crypto asset is risky because those with the majority of supply can easily manipulate the market. The next important project metric is the team behind crypto projects. Studying the team members and the resume can give us very useful information if they have the required skills and expertise to run the project and reach to the projected milestones or not. And the last metric is competitors. With all project metrics being said until now, you may find a crypto project very healthy and high potential of growing and achieving its goals, but this is not enough and you must identify and analyze the projects it's competing with and also any legacy infrastructure is trying to replace. So always remember that analyzing the competitors is also important in investing of any crypto project because at the end, by applying the same metrics and indicators, you may figure out that the asset you want to invest is weaker and cannot compete with the stronger competitors. Alright, I've already explained some metrics, both qualitative and quantitative, that are basically used in fundamental analysis of crypto assets, but please pay attention that these metrics alone can be misleading and not giving the correct information in every dimension, as I've already mentioned for some of them. For better analyzing these metrics and getting deeper insight into the crypto asset fundamentals, we can combine these metrics by the help of statistical and mathematical formulas and create indicators and ratios. To give you an example, as I mentioned in the video, transaction count can be a sign of network activity, and a higher number of this metric when you're looking at two coins may give you a signal that there is more network activity for the coin with higher transaction count. But as I explained, this metric can be misleading and one person can transfer money back and forth to inflate the activity. Besides this, looking at the transaction count in isolation doesn't tell you much when you're comparing two coins, but if we make a ratio based on this metric, for example, if we divide the market cap by the transaction transaction count will have a ratio that better describes what is going on each network in terms of transaction and utility. In this case, lower ratio would be better as it shows higher amount of transaction in relation to market cap, and the higher ratio with the other coin may show it's overvalued. Please pay attention that this was just an example, and in practice, any conclusion must be made by comprehensively considering all the fundamental aspects of a crypto asset. There are some popular and commonly used indicators and ratios that many crypto investors use them. I'll cover them in a separate video, and I will also show you how you can access to those fundamental information about crypto assets and how you can correctly analyze them. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your investing.